interest rates are more than double what they were a year ago today. So how can we get you an interest rate that's 3% below what the current rates are? We're going to dive into that right now. Hey everyone, maybe you're thinking about buying a home, but you've been priced out of the market, or interest rates have priced you out of the market. Don't worry, we can still get you a loan that's as much as 3% below what the market average is. We're going to talk about two different ways that we can reduce your interest rate, and it's probably something you haven't thought of yet. Before we get into that, my name's Aaron Ken. I've been a real estate agent here for 21 years in the DFW Metroplex, and I've helped thousands of buyers buy a home just like you're thinking about doing. So please reach out to me at any of the social medias below. Comment to this video. If you would please like and subscribe, that would definitely help me and help our channel grow so we can get positive information to DFW home buyers just like you. So let's get after the two ways that we can actually reduce your interest rates. Some of this will be a little bit technical, but I'll probably try to make it as simple as possible. But most of our home buyers today are in this kind of wonder if they should buy now, if they should wait, will interest rates come down, will they go up? It's kind of a tough home buyer market simply because interest rates have escalated double of what they were a year ago. And then there's this wonder of a recession. Are we going to be seeing that come in the future? And what is that going to do to home prices? Well, have no fear. I don't think we're going to be in anything like we were back in 2008 through 2012, where we had that great recession or that market crash in real estate. What we're seeing now is we're seeing a stabilization of markets, but what that's doing is we've actually come down in price 10% from our peak. So actually now is a very good time for a home buyer to buy, but one of the biggest things that they're up against are these high interest rates. With the interest rates the way they are, your average home prices have gone up for the same kind of home. So what that's doing is having downward pressure on price, where you get to save as a home buyer, but it's affecting the seller from that aspect. So there are actually two ways that we can lower interest rates. One of them is what's called a simple buy down. So you can actually buy down an interest rate. Interest rates are talked about in points. 1 point is 1%. So right now about the average rate's about 6.5%. So if you wanted 1 point lower, you'd be buying that rate down to 5.5%, thereabouts. But when we're talking about buying the rate down, we actually buy what's called discount points. And discount points are 1/4 of 1%. So let's use an average $350,000 house. An average $350,000 house right now would have a principal and interest payment at 6.5% of $2,508 a month. We're not mixing in down payments or talking about what your taxes and interest would be on this amount. This is just strictly principal and interest on a $350,000 loan. It'd be $2,508 a month. If you wanted to buy 1 full percent down, that rate would reduce down to 5.5%, and it would be about a $2,283 a month loan at that point. So you can see there is significant savings, about $150, $160 in order to do that, but it's going to cost you a lot of money to do so. Right now, like I said, 1 basis point or 1 discount point is 1/4%. So you would have to buy 4 of those. So you take 1% of $350,000, which would be $3,500, sorry. That would mean you would have to spend $14,000 to buy 1 full percent of interest points down. Now, the benefit of doing this is you're locked into that rate for 30 years. So if you don't believe rates will ever come down below that 5.5%, then this may be a wise thing to do, especially if you're going to be staying in the home long term. Now, why would a buyer want to do this? 1, they're going to lower their overall cost into the home. 2, they're going to ask for closing cost concessions from the seller to do this for them. Now, why would a seller want to do this? Think of it from the seller's perspective. They could sell their home for $350,000 and offer what's called a buy down. So they could offer closing costs concessions to you, the buyer, and give those to you instead of reduce the home price. Now, If they reduce the home price from $350,000 to $340,000, the average payment on that $340,000 with everything else being the same would be $2,439. So you can see, yes, you would save $10,000 gross off the home, but if you actually bought the rate down, it'd actually be a bigger savings for you, quite a bit bigger savings for you on a monthly payment basis. So that's actually how we talk about buying the rate down. The second is a unique program called a 3-2-1 buy down. There's also other variations of this as a 2-1 buy down or a 1-0 buy down. Basically what it means is we can actually buy down the rate by 3 percentage points. Now we need seller closing costs to do this. And how we do this is basically the seller would grant you the closing costs in order to do this. Now, anytime they're granting you closing costs to buy down a loan, whether that be a single buy down or this 3-2-1 option, if you ever refinance, that money spent is lost money. So in the case of 1 full percent, $14,000, you better make sure you're going to stay at that rate for a while before you refinance, or you could be actually losing money at that. So in this case, the seller would give us, let's say $12,000 towards a buy down. And we could use that $12,000 in what's called a 3-2-1 buy down, where the first year that you own the mortgage, you would actually be paying a 3.5% interest rate. So we'd reduce your interest rate by 3%. The second year you're in the mortgage, it would actually go up 1%, but it'd still be 2% less than the 6.5% current rate. And the third year, 1%. And then after that, the fourth year through the 30th year, you would be paying the full 6.5%. Now, the only way we can do this is to get closing cost concessions from the seller. Again, why would the seller want to do this? One, they're going to attract more buyers by advertising that they can get a 3.5% interest rate versus a 6.5%. We're dealing with sellers every day. And instead of them spending $10,000 to reduce the price or $15,000 to reduce the price, let's invest that $10,000 or $15,000 towards the buyer's buy down of the interest rate. It's a benefit for the buyer, and it's a bigger marketing benefit for the seller because they can advertise something that other sellers aren't advertising. Plus, the interest that the buyer is saving is pretty substantial. Now, one thing I do want to caution you on as a buyer is if you're buying only to get under a certain price point, you probably shouldn't do this, right? As far as if you need your payment under $2,000 a month in this scenario, the 3.5% interest rate would get you there at $1,867 a month. Now consider that compared to the $2,508 a month, that's quite a bit of a savings, $640 a month. But if the only way you can make your bills is by having this $1,867 payment, you shouldn't do this. Because the next year it's going to jump up by 1% and the payment's going to be $2,069 a month. And then so on and so forth up to $2,283 if it's 5.5%. So you do have to budget in that rate increase. But the nice thing is you can start at a lower monthly payment. So let's say that's what it takes to get you in to start with. And then you're going to improve in your job. Or maybe you're getting a promotion or you're right in line for a promotion. This may be the time to do it. Or maybe you're a buyer that can make that $2,500 payment. You just don't want to. You would rather make the smaller payment and hope that interest rates go down. Now, I don't have a crystal ball, but everyone I talk to from other real estate agents, lenders, economists that we listen to, everyone's predicting that interest rates will fall back into the 5s again at some point, and maybe even lower than that. But we don't know if that's going to be 6 months from now, 12 months from now, 3 years from now. We just don't know. But one of the best options for you is to go into like this 3-2-1 buy down and then refinance out of it when interest rates dip down below where your threshold is. So in conclusion, you can still buy a house today. You don't have to pay peak rates. You can actually get discounts on homes. And because sellers are having a harder time selling their home, it's easier and easier for us as a buyer to negotiate this for you so that we can add this into your arsenal and into your bottom line by getting you a lower interest rate to get into the home of your dreams. So hopefully you found some good information in here. If you need referral to a lender that can do one of these programs, I have several and I'd be happy to provide them to you. Or if you have any comments, questions, or what do you think the market's going to do? Comment below and I'd love to have a discussion with you. Have a good day, and please like and subscribe to this video and share it on your social media platforms as well. Thank you.